has the big beautiful bill already priced into the market? That's what we're going to be discussing today. It looks like the big beautiful bill is starting to get through the Senate. They've got enough Republican votes. They've made some concessions. They're going to vote on it this week, and it's likely to pass, and then it'll get kicked back to the House. Hopefully, it's signed before the 4th of July. That's the goal anyway. Everyone's going to go on recess for a couple of weeks, so there's a big push right now to get it done. It will be stimulative for the market. It'll be stimulative for the economy. There are a lot of tax cuts in that bill. So the question is, the market really waiting for that news? Technically, the market looks great. Now, since I've been on vacation, there's a lot that's gone on. So let's take a look at our previous pick. Let's take a look at the market action and get our bearings right now. So this is about where I left. June 17th was the last live event that I recorded with Harry. I had a couple of picks. Market was kind of compressing, not really able to get to the new all-time high. So we didn't know which way the market might possibly go, only that it was starting to hit some resistance. So I gave you a long pick and I gave you a short pick. The long pick was bearish, slightly bearish to neutral. CRWV. That was a bearish put spread that I liked selling way down here. It was the 115, 110 bearish put spread expiring normal expiration. That's the third Friday in July, getting a $1 credit for that. And I believe that was very doable back at that time. So if we take a look at that spread, it distanced ourselves from the money. And currently let's make sure we're in the right expiration, July 18th. So we've got the 115, 110 bearish put spread, 17 cents bid offered at 80. Stock hasn't done a lot. It hasn't gone up. It hasn't gone down. And that's fine because we are all the way down to the 115 strike price with the stock at $160. So we don't necessarily care that the stock has not participated with the market rally. It's doing what we wanted it to. Tread water, preserve these gains, let time premium decay work in our favor. And so now we're down to basically about 3 weeks until expiration. Yes, we've got a holiday session in there this week. Fed's in really nice shape. The other trade that I showed you was Starbucks SBUX. And there, I like doing a diagonal spread. I think that Starbucks is going to see some weakness later this fall. I think that the stock has already shown us that it's got resistance here at the 100-day and 200-day moving averages during this market liftoff. What did the stock do? Nothing. That's exactly what we wanted it to do. This is a slightly bearish trade, neutral to slightly bearish. The goal here is we're going to be buying the August $95 puts that span the earnings announcement date. So those option implied volatilities are going to retain their value very, very well as long as the stock just treads water, which is what it has done. And we were selling the July regular expiration $90 puts. So that was a diagonal spread. The goal here is to have the stock stay where it is. It's slightly in the money, slightly below $95. And then we can see what the market's doing, and we'll be able to exit those $95 puts in August for a gain. So that trade's also working out well. Put that on for $4.75 debit. Let's take a look at where those options are currently. And we're going to go into the normal August options expiration. We're going to click on buying the $95 puts because those are the ones that were long. And we're going to go in and take a look at where the July 90 puts are. So we'll get a feel for where is that spread currently trading. You can see that it's 445 bid, offered at 528. 475 is right around where we were putting that spread on. So hasn't moved it out one way or the other, but those $90 puts are going to start to lose their time premium pretty quickly. So all things told, That trade with a market liftoff and the stock still treading water, it's doing exactly what I wanted it to do. So uncertainty, let's talk about the market and what the heck happened. We went in and bombed around, and it was a very successful mission. We didn't know that it was going to happen. We didn't know the degree to which it would be successful, but globally, the market is viewing this as very good news. There is less uncertainty in the world with Iran not having a nuclear weapon. And that really is all the market's focused on. And that threat has been looming out there for decades, and they were getting closer and closer and closer to having a bomb. So I'm not particularly surprised that the market has lifted off and broken out through this horizontal resistance. Now it's starting to reach up to the all-time high, and it actually broke through it. Could the big, beautiful bill fuel this move higher? I think it could, and more so than the big, beautiful bill being priced in, I think everyone knows what to basically expect from it, but they do want to see it get passed. They do want to have the tax cuts that are in the bill. But there's nothing to really stand in the way of the market right now, because that news that I feel is still pending, an economic slowdown globally, has not really shown its ugly head here in the U.S. yet. I still think it's coming. I think it's close. We're seeing it in ISM manufacturing it. We're seeing it in ISM services. We've seen it in the beige book. Initial jobless claims came in a little bit last week, but they're still elevated. This is going to be a huge week for economic news. We're going to have ISM manufacturing, ISM services, official PMIs are going to be coming out. We're going to have the jobs report, not on Friday, because Friday's a holiday, going to be coming in on Thursday. So this is a very compressed trading week with lots of economic news. And so the market's really been waiting for that bad news to hit, and it hasn't hit yet. So the tariffs, the initial shock that caused this big sell-off, and now we've got the rebound. We're still in wait and see mode. And when are we going to start seeing inflation? Well, how is that going to be playing out? Are corporations going to be passing those costs on to consumers, or are they going to be eating those costs and reducing their profit margins? Perhaps China's got a huge glut of inventory. I know they do, because a lot of those goods are trapped in port yet. They haven't been exported. So these manufacturers are deeply, deeply discounting all of their goods. So at least for a few months, I think that the tariff could be offset by those manufacturers unloading their goods at very low prices. And we know they're doing that because they've already been doing it in the EU, and the EU now has trade dumping restrictions that they're looking to place on China. So how does all this play out? How does my timeline play out? What do I think about this market breakout to a new high? The big, beautiful bill has been the one thing that's really cut me from getting super bearish fundamentally. And I knew that this news was going to be coming out. But from a technical standpoint, we've got a breakout. Really, really nice breakout. This is a bullish flag formation, slight downward sloping trend line here, gap up. Market continued to rally all last week. Now we've got a new all-time high for the market. So technically, there is absolutely no reason to be bearish. Now, your market confidence is always going to drive your longer-term swing trading. I don't have a lot of confidence in this rally, so I'm not going to be participating aggressively. And that's okay. There are going to be times when you feel really confident. And if that's you and you feel that we are off to the races, then you have to trade accordingly. But the problem with pushing yourself into that camp and not having that confidence is that you're going to take more risk than you're willing to shoulder. And at the first sign of trouble, you're going to bail out of your trades. You have no staying power. So for me personally, because of what I feel is coming in August and September, I'm not going to get aggressively long here. I feel the market's overextended. I'm not seeing the type of price action and push higher. This is news driven. We still have some good news coming out over the course of the next week, potentially with the big, beautiful bill. And then we're going to be getting into earnings season. So we'll see what type of earnings guidance we're going to be getting from these companies, because they're going to be trying to assess what the tariffs are going to do to their bottom line and how much of those expenses are going to be passing on. We'll see. So in a neutral to slightly bullish environment right now, what am I looking to do? Well, I'm going to be looking for a stock that really has nice, tight, early price action. I mean, as tight as possible, because that's going to tell me that buyers are engaged. Long-term money is coming into that stock. And I'd prefer not to have anything that's too far out of the gate. Ideally, if it's got a lot of option implied volatility in it, then I'm very happy and very satisfied generating returns right now on those other spreads that I had mentioned to you, CRWV. That's going to yield a 25% return in the course of a month. I'm very happy with that. I don't need to be out there taking aggressive positions. That's what works for me personally. If you believe that this market is going to blow through 630 and perhaps go even higher, then you've got to be taking a more aggressive stance. You could be buying in the money calls that have a couple of months of life left, and you could be looking at deltas in the 0.7, 0.75 range and riding this move gradually higher and higher. I believe that once the big, beautiful bill gets passed and we start to hear that there is some soft earnings guidance, some uncertainty, we have a hawkish Fed. Half the Fed officials have said they don't see a rate cut coming this year. Now, that's softened, I believe, a little bit in the last week, just from what I've been able to read. But yet, a hawkish Fed going into August and September, that's when everybody tends to get nervous because the politicians have left for recess. You've got the Fed in recess, and there aren't a lot of warm fuzzies for the market to really latch onto, and fear starts to creep in. So by September, October, that's typically when we see a bit of a market pullback. After a nice run like this, wouldn't be surprised to see it. Again, I'm not going to be out here buying puts right now because the market is not telling me that it's ready to roll over. How do I get into the bullish camp? Well, how do I get into the bearish camp? I would need to see a big rejection, like a big bearish engulfing candle. I'd mentioned this in the live event. I would need to see a gap up on the big, beautiful bill to a new all-time high, and that very same day, that very same candle, I'd need to see a long red bearish engulfing candle closing on its low. That to me would be a sign that, yes, we were waiting for this news. It came out, it generated that big gap up, and it was sold hard all day. If I get that, and I may not get that, but if I get that pattern, I'm going to be pretty confident in taking some very short-term short positions, because that tells me that there's a short-term high that's in and that this was a sell the news event. If I don't get it, the market continues to grind higher and flow higher, no problem. I'm going to be day trading. I'm going to be trading strong stocks that are breaking out to a new high. So I'll participate in this rally. I'm just not going to do so on a long-term basis, and I'm going to be relatively passive, because that's what matches my level of confidence right now. So let's take a look at some stocks. I ran a search, and we will put up custom search, and I'll show you what I've got. So actually, I think I've got one already pre-configured because I ran it earlier this morning, and here it is. So I'm going to take this down and move it over, and I'll show you the criteria that I used. I have to see a stock that has relative strength on a D1 basis, of course, and there are going to be a lot of stocks that fit this criteria. I'd like to have a buy signal on a daily basis, on a D1 basis. I'd like to have a buy signal on an M5 basis for the stock. That tells me that during the day on Friday, the stock was very strong. Why is that important? Let me move this down for just a second. I'll move it over. The market reached a new all-time high, and then that is a fairly stiff round of selling. Nice rebound, okay? But this tells me that it's not going to be a straight up moonshot from here. There are sellers. And you don't get that type of price action if everybody is in buy mode only. So, again, that tells me that any stock that is on a 5-minute buy signal didn't go through this. And that's why that variable is very important to me. So what else do we have in here? I want good option liquidity. An option liquidity rating of -2 or higher is going to be very liquid. Relative volume. Show me a stock that had 2 times its normal average volume on Friday. Again, I'm looking for those institutions to be in this stock. They want to buy it on this market breakout to a new high. No earnings today or for the next 15 days. Why is that important? Because I don't want a company that's going to be announcing earnings next week or the week after, where I'm going to have to buy those options back. I want to make sure that the options expire before the earnings announcement date. And we're going to start getting earnings in the next 2-3 weeks. They're going to start ramping up. So that's why I picked that criteria. These are the stocks on my list. So I've already taken a look at all of them. The one that I like the most is AEVA. Wait till you see this chart. Some of you are going to go, oh my God, I would never take a position in that stock because it's run too far. I look at it as this is the type of institutional buying that I want to see. It has been relentless. Every single dip has been bought by long-term money, regardless of what the market's been doing. So before I even left on vacation, market compressed, drifting a little bit lower. What is this stock doing? Powering higher and higher and higher. Nice, tight, early candles of a single color. But it's run so far. How could I possibly buy it here in good conscience? I'm not going to buy it here. Look at how the stock has been able to ride that EMA 8. This is just beautiful stuff. And look at the volume. This is long-term money what's into this company. And that's the resulting pattern that you get. So I did take a look at the news. Who are they? What do they do? They do automated driving systems, and they've signed a couple of very large contracts recently. In fact, I think 2 weeks ago, they signed a contract with Airbus. Yeah, the plane manufacturer. And it's going to be used for taxiing aircraft on the runways, which there seem to be a lot of issues recently with near misses while these planes are taxiing. I see a lot of potential for it. Doesn't really matter what I see, to be quite frank. It's got news. It's got a lot of good news. And that is why you are seeing this price action. Long-term money wants in. And it has not had any substantial dips, which tells me that that money is still aggressively pouring into the stock, and that when we get the first dip, it's going to be bad. So how far am I willing to let it dip? Where am I looking to get into those stock? Well, if I take a look at the EMA 8, it's at 31.60. Would I buy this stock on the EMA 8? I'd like to buy it a little bit cheaper than that. So I don't know that I'd be able to get it a lot cheaper because I want to sell option premium and I want to sell high option implied volatility. This stock certainly has it. You can see it all the way up here, 139. These options are rich. Would I be willing to buy this stock down around the $30 level? Yes, I would. Better a starter long position. No, I'm not putting my whole account balance at risk. This is the kind of stock where my intention is going to be, yes, I'll sell some premium down here with the intention of buying the stock on assignment as a starter position. And when I enter the position, I want to see the stock keep marching higher. Then I'll wait for another dip and then I'll add to it because this stock is on a mission. This stock is on a longer term mission. Zoom out, take a look at it. You can see it's lifting off, but the whole robo-taxi space is going to catch on over the course of the next 2 or 3 years. They're going to be competing with Tesla and everyone else. Right now, these contracts are definitely proof of concept, and there are institutions who want to buy this stock. So, July 18th. So now we're going to be 3-week play with a holiday in there. Probably not going to be a whole lot happening after the 4th of July week, just before earnings. But regardless, let's take a look at where these put options are trading. And if we go down to the $30 strike price, you can see that those options are $1.60 bid, offered at $2.10. So if I get $1.60 for these, I'm going to be pretty willing seller. That means that I can buy the stock at $28.40 in the next 3 weeks, which puts me well below this level right here. Buy the dip. This is a great way to buy dips on strong stocks. You are not chasing the stock. You're waiting for a natural, normal pullback in a bullish market. I have a bullish market here. I've got a very, very bullish stock. Yes, I would be willing to do that. And if I'm putting up half of the strike price as my margin for the trade, and I'm selling the $30 puts, I'm putting up $15 in margin, so I can buy the stock on Reg T. And if I'm bringing in $1.60 in premium, that is more than a 10% return in the course of the next 3 weeks. Yeah, I'm going to take those kind of returns, especially given that my market confidence right now is not super, super high. I think we could get a nice move higher on a big, beautiful bill getting passed sometime around 4th of July. I think it's fairly likely to happen. I think it's going to get pushed through. And yes, that will give the market at least one more leg higher. And then I think that we start to see a little bit of waffling, a little bit of resistance. Everyone's going to be waiting to see how earnings come out. Is the guidance going to be soft? And then, of course, the economic releases. This could be the first jobs report where we actually see a fairly substantial decline in jobs. Now, that's been bearing out in the beige book, and the Fed has mentioned this. We saw that in ADP last week, which ADP is going to be coming out again this week. We've seen it in Challenger, Gray, and Christmas. We've seen it in the initial jobless claims numbers have been coming up in the 240,000 range. So they are starting to creep higher. So this is the first time when I'm actually expecting to see a little bit of softness in the jobs report on Thursday. So if you get the big, beautiful bill passed, you get this nice little rally, and then you start getting a little bit of negative economic news and some cautious guidance, I think the market's going to see some resistance. At very minimum, it's going to compress and try and consolidate some of these gains because it's made a nice run recently. That's how I see things playing out. I really like this AEVA trade. I like the fact that institutions are in there buying as much of it as they can at this price level. They see a lot of promise for the company, and any pullback into this $28.30 level, I am a willing buyer. Some of you will ask, I am just not that excited about it. Maybe I could sell the $25 puts. You'd have to put up $12.50 for that. Maybe I could get somewhere in the 70 or 80 cent range for that. I'd be happy to buy the stock at 24.20 in that range. Nice. That's right around AVWAP-E. I think that works well too if you want to be even more conservative with that play. That's all I've got for you. I'm going to be doing a live event with Hillary on Wednesday. I'm going to be back in third swing probably Tuesday. So lots of economic news. I'll have all my pre-open market comments out. Hopefully you guys made a lot of money in the course of the last week. We should have some pretty good trading for the next few weeks here. So watch for that live event on Wednesday. We will see you then. Thanks for watching.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.